let's get started. So yeah, thanks everyone for joining. Today we're going to talk about how to choose your fund admin. We've got a great panel here today. I'll let them introduce themselves in a second. We'll start off with sort of logistics, and Emma, if you'll let everyone know how we're going to run that.
Yeah. Well, thank you again, everyone, for joining us. Just a couple of things on the webinar. So we'll do an hour today. If you look at the bottom right-hand corner of the screen, there'll be a little questions box. You can throw in questions at any time. We'll try to get to them during the webinar, but if we don't, we will reach out after the fact or after the webinar is over and contact you to address questions, but go ahead and throw those in. We definitely want to hear kind of what your thoughts are. After the webinar, we'll send out a follow-up. It'll have a link to a recording of this video. So I'll upload this on YouTube, and then you'll get a link to rewatch this or share it. I'll also share contact details for Sean, Rob, and Winter. So if you have any questions that want to send directly to them or reach out after, I'll share those contact details. But yeah, those are the logistics. I'll hand it back to you, Sean.
All right, thanks. All right, let's start with introductions. Actually, why don't you go ahead and introduce yourself first, Emma? We'll go Rob and then Winter.
Awesome. Well, nice to meet everyone who's joining us. But my name is Emma Summers. I am the Director of Business Development here at Vector. Just a little bit about Vector. We are a fund admin focused on closed-ended alternative investment vehicles. So we support any type of, venture capital, private equity, fund of funds, digital assets, real estate. But we basically do all the back office functions for these funds. So yeah, that's us.
Great. Rob?
Yeah. Hey, everyone. I'm Rob Lusk. I lead business development as well for Sydecar. And Sydecar is an end-to-end platform for fund admin. We're specifically focused on venture capital. So we'll do everything from fund formation all the way through distributions, and all of that's done on a technology-driven platform.
Great, thanks, Rob. Winter?
Thanks, Sean. So my name is Winter Mead. I'm with Cool Water Capital. I was with a multifamily office in San Francisco called Hall Capital, founded by Katie Hall. And then I moved over to what is now Sapphire Partners, where I worked with Beezer Clarkson and Nino Morakovich there. And also Sean, we overlapped at that firm as well. Now I'm at Cool Water Capital. Cool Water, you can describe it simply as an accelerator or an incubator for helping build investment firms, primarily venture capital firms. So we've seen the build process a lot of times for emerging managers, primarily first-time funds. And so we have a perspective on how to build your firm, including how to set up your fund administration as a function, and with service providers such as Vector and Sydecar. So we've had a lot of experience working with both, and also working with Sean, who, if you don't know him, is one of the most helpful and consistently helpful people to emerging managers going on as long as I've known him, which is over the last decade. So excited to be on this panel, excited that everyone's joining, and thanks, Emma, for the opportunity.
Yeah, of course.
Thanks, Winter. My name is Sean Park. I'm a managing director with Citizens Private Bank. We bank PE venture capital firms, their partners, their portfolio companies and founders. And as Winter said, my background is I was actually a CFO for a bunch of venture capital firms. So super happy to be here, and very good topic, very topical topic, I think. And so with that, let's go ahead and dive in. Actually, I'm gonna ask this question. Just the assumption is everybody knows what a fund admin is, but Emma, why don't you just tell us what is a fund admin, just briefly, for those that don't really know what it is?
Yeah, so I guess the way you look at a fund admin, they're a provider that really does all the back office functions for a fund. So we were actually joking about this earlier. It's a bit of the non-sexy parts of running a fund is what the fund admin does. But it's essentially everything revolving around accounting and reporting, money movement, tracking investments, investor relations, things like that. But anything that involves that back office. Great,
thanks. And now I'll turn it over to you, Winter. So you've seen, from your vantage point, you've seen a lot of different shapes and sizes. So could you speak to a little bit about the different challenges that different types of entity, so let's say a SPV versus an institutional fund versus a micro VC or emerging VC would face, and speak to how you would expect fund admin to cater to those?
Yeah, sure. So I don't know if I'd say there's a big difference between micro VCs and institutional funds. I'd almost put them in the same category, but I'd say their behavior is different. Like a micro VC, which is just a smaller investment fund or a smaller venture capital fund, like they're probably going to have, lower expectations from the LP's perspective, right? Like you're still building the firm. So your expectations will be lower, but eventually they're going to be the same expectations that an institutional firm would have to meet. SPVs, I'll touch on that in a second, but just sticking with investment funds to start. So thinking of multi-asset vehicles, let's just, for the sake of argument, say that SPVs are a single asset, a single purpose vehicle. The single purpose is a single asset. But for funds, the idea is diversification across multiple assets. And so what that means is, your first investment is easy, but then fast forward, what happens when you have 20 investments or 30 investments or 50 investments, right? You have to track that data. You have to organize that data. You have to have financials around that data, right? And make sure those financials are accurate. And there's compliance around that reporting, especially if you think about when you're setting up a fund, you have this legal document that's between you and your limited partners. And that legal document states kind of the cadence of reporting and what you're expected to report to your limited partners, right? And so, you can do it internally, but that might be risky if you don't know what you're doing or how to organize those financials. And so you hire a fund administration platform, right? Like a Vector or a Sydecar to help you organize that data and organize those financials and be compliant with your limited partnership agreement, right? The agreement that you have with your limited partners so that you're reporting on time accurately on all of your investments. And also that includes, the information you'll need for tax as well. Tax would be a separate service provider. Sometimes it can be coupled with the fund administrator. So for example, probably we'll talk about it on this call, but Sydecar can help you with K1 reporting that you'll need for your respective limited partners. But the fund administration, they kind of help you, like your micro VC or an institutional firm, they help you organize all of that. And it's very helpful so you can continue to focus on just investing, right? I think with SPVs, the reporting, maybe you could argue it's a little bit easier because it's just a single asset, but the fund administrator is doing the same things with respect to accounting, financials, and tax. If you're a small fund, if you're an institutional fund, or if you're an SPV, the complexity is sometimes more simple if it's just an SPV though.
Great, thanks, Winter. So I'll turn this over let's start with you, Rob, and then I'll ask you the same question, Emma. You guys, to my knowledge, are both very technology forward fund admins, which I think, coming out of, the Great Recession and all these types of things where we dealt with professional service firms and others having turnover and things like that, the issues we all faced with, just the human condition, I suppose. Tell us about, how you use technology and, why you're so technology focused at your firms. And again, start with you, Rob.
Yeah, thanks, Sean. So technology is very foundational to the Sydecar story. Is really the reason I joined Sydecar a couple of years ago, was this thesis around being able to productize the key components of administration. And there's a story, what precedes productization is standardization. And the idea was that if we could create certain standards with the inputs around fund formation, around docs, that we could automate taxes, we could automate financial reporting, automate distribution, some of those really critical elements of administration. And so that's really what Sidecar is built on, right? There's a technology component when it comes to the front end user experience, certainly. But the unique value prop from the Sidecar perspective is actually how we do our jobs on our side, and leveraging infrastructure with respect to those key facets of what we do. So, for example, with K1s, like you alluded to, Winter, we'll deliver K1s for any fund, any vehicle that's run on the Sidecar platform. And we've been able to automate what is commonly a really burdensome, often unreliable setup by getting your K1s on time, getting them accurately. And because of the tech infrastructure that we have a scalable way to do that. That's not dependent on a lot of contract tax workers to kind of work with K1 volume as it comes. So that's the Sidecar story.
Well, that's great. Software's eating the world, so that's a compelling story. Emma, how do you guys deal with, or how do you use technology to better your service?
Yeah, so we take a little bit of a different approach. We're very much positioned as a people first, service first oriented firm, but really the focus was how do we bring technology to elevate that. So we know the importance of technology in this industry. I think as we've seen, like Sidecar is an incredible platform. We have all these other automated platforms, but we also, and we'll talk a little bit more about this kind of as we go through some of the other questions, but depending on your fund, like if you have complexity of the fund, if you need that level of customization, we really, wanted to approach that and how do we handle that from the people side, but also how do we elevate that through the technology. And so with our tech, we have a proprietary system called Valence. We've really built that ground base of it as a general ledger, developed specifically for limited partnership accounting. And the focus of that was how do we build better workflows, create more efficiencies for the team on the back end. So how do we automate some of this data entry, take out the mail merges? Really, how do we help the team on the back end so that they can offer that more high touch white glove service to our clients? So we do a lot of development on the front end as well. So we have like our LP portal and our GP portal, which I'm sure we'll talk about later on, but do a lot of investment on that. But the original focus of the tech was how do we create better efficiencies for the team to be able to offer the service. So a little bit of a different approach from Sidecar, but I'm sure we'll dive into kind of the differences and who we work with. Yeah,
well, let's just kind of ask that question because I'm sure it's probably on people's minds. I mean, how do we choose between the two of you? When would you pick Vector over Sidecar over Vector? And both of you, please answer. Maybe yeah. Rob, you go first.
Okay. Yeah, I think the story around product versus the flexibility and customization that the people-driven approach that Vector has, I think that's a really fundamental consideration. Is are you thinking, right? Is your structure going to be relatively standard? Is your approach right? Is structuring strategy? What are the expectations of your LPs? Winter alluded to some of that before. That really, I think, is the key consideration for, is product the right approach? Can product work? Are you on the rails, so to speak? Because if you are, if you say, hey, these are the things that I need, and this lines up pretty well, then you get all the benefits that come with having a product that's tailor built for that use case. I think, and Emma, you can jump to this, but right, when you have some of those other components that are custom, that are non-standard, that need an element of manual customization, then that's something where, right, Sidecar has limitations, and somebody like Vector can be a really good option. The last thing that I'll add on my side is, and sometimes there's correlation here, sometimes there's not, but cost. So size of the fund is another key component. And now, again, you could have $100 million fund that's right down the pipes, and maybe we're a good fit. But certainly when you get to some of the smaller fund sizes that we often see with emerging managers, then regardless of kind of how you're thinking about structuring strategy or customization, exposure becomes just a critical facet of what you're doing. And so you look at what are my fund expenses as a percentage of committed capital. And that's where, again, the sidecar story with the cost efficiencies that we deliver with our product become really compelling, just in the sense of making a feasible model for some of the smaller funds that we're seeing.
Yeah.
So that's where we're coming from.
Yeah, that's awesome. And Rob kind of mentioned, exactly what it is, but a lot of it comes down to, one is structure of the fund. With us, our system and our services are a lot more flexible. So if you have to have like different classes of, LPs, or you have like different types of complexity within the fund, our system is more flexible and our services tend to be more flexible in that way that we can support that type of vehicle. Another big piece of it too is really, preference of the fund manager. Like, do you want to go for the tech platform that you don't have to interact with someone as much and you can kind of do everything as a little bit more self-service, or that automation component that's more important to you? Or are you looking for a team that you might need more like advisory help and need to pick up the phone and say like, hey, I've never done this before. Can you show me what best practices are? Can you walk me through how to do this? And I think that's part of, what makes us a little bit different on that side, is if you're looking for kind of that team member, that personal interaction, then, we'd be a better fit on that side. And then also too, just, I guess the different types of funds that we work with, as Rob said at the beginning, they're very venture capital focused, whereas with us, we can do any type of closed-ended. So we have expertise in closed-ended real estate and digital assets, kind of all across the board when it comes to closed-ended funds. So if you need that kind of more specialized services and that more advisory type relationship, that's really where we come in.
Okay, great. So it sounds like what I'm hearing is, if you're sort of more plain vanilla and perhaps cost conscious or more cost conscious, then, Sidecar is going to fit that model better, perhaps. And for Vector, if you need that human engagement but tech enabled at the same time, then it's probably a good fit. And maybe if you're not plain vanilla and you have some complexities, as you say. So let me turn it over to Winter now. From do LPs care? What do they think about fund admin? In your experience, do they lean in on the decision around which fund admin a GP or a venture fund engages with?
Yeah, I just want to touch on your last question to Emma and Rob first. So
sure.
If you're thinking about a framework, right, I think this was touched on by both of them, but it's a product versus a service. So, and this is kind of a crude analogy, but if you think of Sidecar more as a tech product, right? Like you can take a tech product, it's productized, you can take it off the shelf, you can use it, but it might be at this point in time slightly harder to customize, but it might be the right tool for what you're looking for. So you're able to, get in, put together an SPV, and you're saving a lot of cost. You're saving a lot of capital because it's this product you're basically buying off the shelf and using for a specific function like an SPV. Now, there's a different one, like if you're thinking of the service, Vector more would fall into that service category. So you're still getting a product, right? The product is still like fund administration, but there might be more complexity with what you're doing, or as Rob was saying, you have a slightly bigger fund. And so thinking about like you might need some more hand holding, some more help, some additional, tweaking when it comes to compliance with your LPA. And therefore your fund administrator is helping you with that, right? Another framework to think about as an LP, so answering like, do LPs care about the fund administrator? Another framework to think about, and maybe this is debatable, but there's 4 big functions in the beginning. You have banking, you have legal, someone that's helping you draft your LPA, draft the contract you have as a GP with your LPs. There's tax, which, no one can escape taxes. And then there's fund administration, right? And if you go back a number of years, fund administration was an internal exercise. So another concept is like insourcing versus outsourcing. So you'll still talk to people in the private equity world that believe that all fund administration is insourced, right? Like you at the firm are responsible for doing all of that accounting and financial reporting inside of the firm. But venture has changed, right? Over the last 10 to 15 years, there's been a massive outsourcing effort to folks like Vector and to Sydecar, right? And so before, if you're an LP, you're doing diligence and you have expectations and like you expect to see a team that's built internally that's doing this work. But the glory of having a Vector or Sydecar in the ecosystem is that ability to outsource that accounting and financials work. And therefore, right, like why would you do that? You do that for cost saving reasons. So as an LP, you're kind of like, great, you're saving costs. That means more investable capital from your fund. And you have professionals that are doing this with a lot of different funds. And so ideally that means fewer mistakes, higher compliance, which is great from an LP's perspective. I do think there has to be, Vector and Sydecar have great reputations in the ecosystem. So if you're using one or the other, at this point in time, LPs are happy, right? You're checking the box on a core function that's required of almost every VC firm now at this point in the market. But something to think about if you're not using a fund admin that has experience in venture capital financials, for example, or venture capital valuations, or doesn't have experience understanding how to be in compliance with your limited partnership agreement, you might want to ask those questions in advance. Like if you're out, shopping or diligencing who's going to be your fund administrator for your fund, that's something you definitely want to ask. If you're kind of in that initial phase of, I need to figure out who's going to manage the accounting and financials and reporting for my fund and help me with this, like you definitely want to ask, like, does this person focus on VC? And can they help you as well with other parts of your strategy? So you may have a Vector, for example, that's helping you with your fund. Let's say you have a $25 million fund. You hire Vector to do the fund administration for that $25 million fund, but you also run SPVs like in that follow-on round. And so you might use a Sydecar product off the shelf and couple some of these products and services, right, to fit your strategy. So from that perspective, right, like what I care about as the LP is, are you giving me accurate data? Are you reporting to me accurate data where I can like look and see what I'm invested into and I'm getting it in a timely manner and the numbers are accurate? And if I have questions, right, I can reach out to someone as an LP and get that response, or have a very high degree of confidence that these numbers are always accurate.
That's a great.
You want to know what you're invested into, and you want to know how much it's worth.
Yeah, thanks, Winter. That's a really good response. And I'll add to that. I remember, 100 years ago when I started, everything was in-house. And 10, 15 years ago, if it wasn't for the advent of the outsourced fund admin in lieu of your in-house accounting team, I really don't know that the growth in it certainly would have been a lot slower. I think the growth in the emerging manager space, as we call it today, would have been a lot slower. And I think it's just been really, if fund admins are not a catalyst for it, they're at least a facilitator of the whole ecosystem just growing, and the number of emerging managers that have spun up in the last 10, 15 years. So really thoughtful response. I 100% agree with everything you just said.
Just jump in and add on to what Winter said too, because I noticed he pointed out that one of the things that I really like as well is we talked about like thesis of the vehicles, and you might have a fund that uses us, but then also have like an SPV product or SPVs that you might do that you'd work with Sydecar on. And I think that's partially why we make really great, partners in the industry. And technically we're competitors, but we work together a lot because, you might have a fund that has that complexity, but then you also might have, a fund or a series of SPVs that you're trying to launch to do co-invest, and like Sydecar is a great fit. So it's not going to be, either one or the other. It's, there's a lot of options to have both and work with both sides too.
There's also, from where I'm coming at, so if you're looking to launch a smaller fund, like Rob was saying, a $5 million fund, you have to think of that trade-off where, this is getting probably too into the complexity of like what a fund pays for, but the fund pays for the administration of the fund. And therefore, right, like if you're going with a higher cost, maybe not off the shelf service provider that's taking, over the life of the fund, $1 million, right, of expense to administrate the fund. Like you might want to think about, okay, I'm a smaller fund, I'm $5 million. What is my expenses? Like, what's the basis of that, right? And so what you should be trying to do, this is definitely a normative statement, what you should be trying to do as a smaller fund is look for something that, again, meets those expectations of the LP, but isn't exorbitantly expensive, where it's going to reduce the amount of investable capital you have, right? So if you're a $5 million fund, maybe you only have $4 million or less to invest into assets. And so, like Sean was saying, the reduction of cost of the function of the fund administration over the last 10 plus years is really something to think about in terms of like, what you're eventually going to make and return to LPs. So that's another perspective of like, if you're 5 million and you're using a fund administrator that is too expensive, like you're going to be docked points on that by the LPs, because they're going to be saying, why aren't you using a, just as high quality, but, lower cost version of something, because you don't have a lot of complexity, and like more of those dollars are going to go into your investment, which hopefully that means you'll have a better return at the end of the day. And your LPs are going to care about that because it's their money they're giving to you for you to generate a return. And they would rather those dollars go into the investment than be on a service provider or a product that's too high cost. So thinking of that trade-off as well, as you think about, again, too out of scope for this webinar, but as you think about the budget for your fund, like it's definitely something to think about of, hey, I'm only a $5 million fund. What's the best product for me, or what's the best service for me to meet the expectations of my LPs and to meet the function of, needing to administer my fund and be accurate with the financial reporting.
Mm-hmm.
Yeah, I think there's a trade-off, right? I mean, you're a fiduciary as a general partner to a fund. So you have to present financials and engage, accurate, complete financials and other reporting tax, et cetera. And that's something that, Sydecar, but both of the fund admins here can do. But at the same time, there's a cost to it, right? So the trade-off is the shots on goal, right, on the investing side. So where, a Sydecar is perhaps more economical, you're going to get over the 10-year life of a fund, if you're paying up, $100,000 a year for your fund admin, you're talking about, $1 million that's not investable over the 10-year life of a fund. So I think there is a trade-off. You just have to be mindful and think about these things, certainly up front. And that's, why you certainly talk with Winter and Coolwater about things like that. But anyways, let's move on. So one thing I wanted to mention too is I've definitely seen funds where fund one was like 21 SPVs, a whole bunch of SPVs. And so I was going to just mention that I could see where this could be a great way for you guys to work together in that. And maybe you see this a lot too, Winter. Maybe both of you see this a lot, where you see a lot of SPVs spun up in the beginning, perhaps, and then graduate to a traditional fund, let's say. And then, as Winter mentioned, you see the traditional fund that spins off a lot of SPVs for, co-invest or in lieu of an opportunity fund. Does that statement sound right to you, Rob, Emma?
Yeah. I think that's right. You think about structuring strategy a number of different ways. One is this cost basis and the complexity. What is the strategic intention of complexity, right? And one of the pieces is leveraging different investment structures. That's something that I think is one of the more fun parts of the world that we're in on the admin side, is thinking about SPVs, multi-asset structures, hybrid structures, right? Everything from like, hey, I'm going to start warehousing some deals ahead of a fund, to some of these use cases around offering co-invest to your LPs, getting increased allocation on a deal, and having that be a part of the product that you're selling to LPs. And so all of those things, I think, make for an opportunity for structuring strategy to be strategic for a manager, whether it's out of necessity, I think sort of this linear path that you're talking about, Sean, or it's differentiation, and it's a different way that you can deploy capital and offer that benefit to either LPs or to founders that you're working with by having flexibility and creativity with how you set up and deploy capital.
Mm-hmm. Yeah, and we see the same thing too. Like we'll work with, a lot of the times we'll bring on a fund that may have been doing a series of SPVs prior to build up like the track record, or that was a structure that made the most sense for them and their LPs when they're first getting off. And a lot of the times, like they'll work with a product like Sydecar, and then they may launch a fund that is looking a little bit more, a little bigger, might be a little bit more complex. And so they'll work with us, but then a lot of the times they'll keep, SPVs on Sydecar, or a lot of the times that works really great with us is, and we keep talking about this cost piece, if you're spinning up smaller co-invests, sometimes our pricing might not make sense on the SPV side, and where like Sydecar is a great option because you get the full end-to-end product, with these co-invests. And so, just depending on structure and cost and all of that, but definitely something we see too.
Yeah, that's great. I just, wanted to make sure everybody knew it's not one or the other and you're going at each other. You can actually work together. There's a lot of sort of symbiotic stuff as well. But we're talking a lot about SPVs. So, maybe, actually, Rob, why don't you quickly, Winter already did this, but quickly explain what an SPV is. And then the question is, you don't typically need a management company for an SPV. I'd like to sort of talk to you, how do you work with them versus how Emma and Vector work with them?
Yeah. So SPVs, again, for this purpose here, we're going to refer to it as a single asset investment vehicle. And funds we're referring to as a multi-asset, and in this case, a committed capital structure. So SPVs have two fundamental characteristics that differ from the fund. One is it's one deal, right? And then the other is that investors know that deal ahead of time. And so in almost all cases, at least that we're working with, the investors are actually diligencing the opportunity and then deciding to invest through a structured vehicle, which enables a manager to take economics on that capital, to manage that capital and interface in between the target company, much like a manager does with the traditional fund. So that SPV use case, right, we've talked about some of the applications and why it's interesting and compelling. But to your point, Sean, there are some differences with respect to structure, complexity, and how managers employing that strategy may look and feel a bit different depending on whether or not they're using a fund as well as a structure alongside it. And so when it comes to management companies, we actually do see management companies pretty substantially represented, even for users of SPVs. One reason is, right, anytime you're going to take fees, management fee or carry, it's nice to have a business entity running through it. I think the thing to call out with us is just what that structure and how we work with it, what that looks like. And so we don't actually own or administer the management company piece of it. We're very much focused on the investment vehicles themselves, which is something that Emma can speak to with Vector and their ability to service management companies directly. For us, we do it through partnerships. So both on the entity formation side as well as on the accounting, tax, banking, that's a partnership effort. So we have, right, like a bank like Citizens, we offer those partnerships up for a manager to set up and run their management company, which happens external from the fund admin and the sidecar component of the investment vehicles themselves. But yeah, just to close the thought, you do that with SPVs as well as with funds, because you're going to take your management fee and your carry, and so you're going to run that back through. So we would distribute any of that money back through whichever partner that you've locked in.
Mm-hmm. Yeah,
you do it all. Is that right?
Yeah, so that's a little bit different. So we support the investment entities, the GPs, and the management companies. So I guess on the GP side, it's normally like annual financial statements, of course, any carry calculations, expense processing, accounting, all of the good stuff. And then the management company, so we'll be able to support any operational entity that is for the fund. So that's things like all the accounting and reporting, any bookkeeping, any payroll facilitation. So things like if you hire employees, we'll be the ones to run payroll, expense processing. So if you set up, Expensify or have credit cards, we'll do kind of the process of that and any reimbursements. Also managing things like accounts payable, so bill pay, all the fund bills that you might get through the management company, any management company or management fees that might come through, and then we'll manage taxes on that entity too. So working with that third-party tax provider, making sure that they have everything that they need, but we'll manage the taxes for that entity too. So it's really kind of everything revolving around running the operational component of the fund too.
Great. And Winter, the various funds you help and the places you've worked and the things you've seen, do you leverage the reporting and the other, assistance you get at like the management company as well as at the funds? Just
with your fund administrator?
Yeah.
Yeah, you can. I think, if you're a GP and you're doing this for the first time, right? Like you'll usually get a quote on the management company as well as the fund entity, including the GP and the LP, as Emma was just talking about. Mm-hmm. And you don't have to go with both. A lot of people do choose to use their fund administrator to help do the accounting and financials of both, but you don't have to. Some people have a separate accounting firm for their management company, or, some people even have backgrounds as accountants and they do it themselves. Which again, that's just a trade-off of time. Like, do you want to be spending more time focused on your next deal, or do you want to be doing like the accounting and financials for your management company? So it just comes down to that, again, like trade-off of time and cost. But I do see it where I'd say generally across, the funds we see every year, you're coupling it and you're just paying that additional amount to have the fund administrator do the management company along with the fund entities.
I mean, my experience, I definitely, you need someone. And the reasons that the things I see often at the management company are not just the blocking and tackling stuff, like you mentioned, Emma, the AP and the expense and all that sort of stuff. But it's often the case, I think, certainly with emerging managers, usually they're structured as an LLC and, it's slightly different animal. So things like payroll to partners is different. It's guaranteed payments and, self-employment income, things like that versus W-2 salary. And if you have to do estimated taxes and coordinate all that, get someone to help you on the management company. I'd say that would be my advice. But anyway.
So maybe just another framework here, right? Like you're very simply, for the audience, running two businesses. The management company is your operating business. And again, you're getting management fees into the management company to pay for your operating business, including employees and other expenses that you will pay for with your management company. That operating business, that's just helping you keep the lights on. So it might be office space you're paying for out of the management company. It's employee salaries, right? The fund does not pay for that. The fund is a separate business, and you're hiring the fund admin to admin your fund, right? But you can hire your fund admin to admin your management company operating business too. So you're thinking of your fund admin in that case more like an accountant And like you said, Emma and Vector are offering additional white glove value added services like helping you with expense management and payroll, but that's for your management company business, that operating business that's usually an LLC in the US. But like think of, again, fund admin's your fund, but they can do additional services and help you with your management company as well. But again, just trying to boil it down to like simple frameworks for people that aren't necessarily like accustomed to some of these terms, because they can get confusing.
And it's very different accounting. Like I've run across situations where people with accounting backgrounds have said, "Oh, we can do it in house," because I've run like an operational entity or I've run like a company before with the accounting. But really on our end, it's quite different in terms of the expertise you need. Like we have a separate management company team because it's the accounting behind doing a management company is very different than the accounting behind doing the fund. And so, having that separation, but also that expertise. So like our management company team, they work with all these other clients that, they're seeing all these similarities, but also like, oh, this person's got a similar situation, I know how to handle it and all this stuff. Whereas if you put a fund accountant in that situation, they probably would have had no idea, maybe not no idea, but definitely different of an idea of like how to handle that and vice versa.
Yeah, that's
I'm going to bring up another concept too that I think is really important. And no, Sean is not paying me to say this. So the idea of like when you get management fees in your management company, that is effectively your business's capital. You can use that capital to build your business, to reinvest in your business, to build your business, to pay yourself a salary. The money that goes into your fund and your fund's banking account, that is not your money. That is your LP's money, right? And that's another like very important, simple fiduciary concept that may be lost in certain cases in the early stage market. Your management company is your business. That is your money. You need to manage that business as if you're a startup and you get $5 million per round. Then you have to use that money to grow and hit your milestones and get to that next round. So the management company, again, like that's your operating business. That's your capital to reinvest in your business and make sure your business continues to grow and you can keep the lights on. But your fund money is not commingled with your management company, right? And another important function that I don't think we've addressed yet that a fund administrator can help with, especially if you're a solo GP, is to help inculcate some of those core fiduciary concepts of like, this is your investor's money. You're not putting that money into other accounts. You're not putting it into your management company. It is staying within your fund entity. And your fund admin is a third party that gives your LPs confidence that that's what's happening. Another thing you can use the fund admin for, right, is you can work with them for, dual cash controls. So where are you wiring the money to, and making sure that, your fund admin can act as that effective second partner, right? Where you don't have to set up and release the millions of dollars you're, wiring to some other entity, but someone like a Vector or a Sydecar could come in and help authenticate where that money is going to, authenticate kind of the end customer and authenticate or at least create another person to set up the wire and manage that money and be a check, right? To kind of say like, oh, I think I need to wire to the management company X dollars. Like, I think that's right. Like someone like Vector could come in and say, actually, you miscalculated that like management company fee budget, right? Or no, you don't pay yourself the full year every quarter. You pay yourself, your LPA says you pay yourself quarterly, right? And therefore it's only this much per quarter. So it keeps you, again, like compliant with how the cash flows. And again, if an LP kind of sees that you're commingling funds or you're mismanaging that capital and you don't necessarily have that check and balance with a third party administrator, especially if you're a solo GP, that doesn't create a lot of confidence for LPs that would eventually, invest in your strategy and help you scale up.
Yeah, that's a great point to share. I mean, just to your first point, you've mentioned it a couple of ways. I mean, the management company is the operating company and the fund is the investing entity. I mean, you as a GP or a member own 100% of the management company. In a traditional venture model, it's 99-1. you own 1%. So really, the LPs own 99% of that fund vehicle. But and again, sort of doubling down on what you said, Winter. There could be. It's often the case that when you fill out a DDQ or you're talking to LPs, certainly institutional, they'll ask you, do you have a fund admin or outsourced accounting? And part of the rationale there is exactly what Winter mentioned. You're third party, and presumably you know what you're doing, the LPA compliance, the accounting standards, so on and so forth, and you'll actually adhere to them. Potentially there's conflict of interest if you do it yourself. Now, I'm not going to say that that's, the main reason or often happens, but you do see that question asked. So it is good to have, I think, a fund admin just generally to help with your back office. And it gives some, again, some comfort to your LPs that, the books are the books and they're good to go. So, I'll just double down on what Winter said, but all right.
And for the audience, a DDQ is a due diligence questionnaire. It's sometimes a long list of questions requested by a limited partner. And yes, one of the questions could be, do you have a third-party fund administrator? And you would just write in, yes, Vector or Sydecar.
Great. All right, let's ask some questions about perhaps the future or things that you're seeing now. Winter, anything interesting out there that you're seeing in terms of technology, tech stack, back office?
Generally, as it relates to fund administration, I think it's this theme we've been talking about of, how are you bringing costs down through technology, right? So the templatization or the standardization, something that Sydecar is doing, right? That has changed the industry, like I said, over the last decade plus. I think that's a significant lowering of the barrier to entry to be a fund manager, right? And, we won't go into SEC regs, but you can be an SPV manager, right, without even being an accredited investor, right? So your ability, if you have access, you can create a fund entity without needing to be a high net worth individual as defined by the SEC, right? So just that general trend of, how is technology enabled access into early stage venture and investing into startups is, I think, massive. And that's definitely the trend that Sydecar is building on. And then this trend of, I served a couple of years on the research and benchmarking committee at the Institutional Limited Partners Association, ILPA. And so what we were doing is we were defining standards for the private equity industry generally, right? And so if you think conceptually around what is Sydecar doing, they are effectively doing some of that. They're standardizing some of this how do you set up a fund very quickly, efficiently in a productized way. So again, I think that's a big trend as well. And you're using technology to accomplish just the productization of launching a fund. Obviously, you should really internalize it as a GP. The goal isn't to just launch as many SPVs or funds as possible, but it's to say hey, I've got a really distinct opportunity here that I think I'm going to make a return for my limited partners, right? The 99% of capital that isn't your capital in the investment vehicle. So that's where it starts. I think I'm going to make an investment return, but the ability to quickly and efficiently launch a fund and the amount of time it takes to do that, right? It's amazing how much the industry has changed over the last 10 years, right? I wrote an article, I think it was 2013 or 2014, called "To SPV or Not to SPV." And some of the most sophisticated investors in the world were still trying to figure out what an SPV actually was and how to actually use it, and whether or not they should actually use it and how they should engage with their LPs to use it, right? And so fast forward, not even 10 years later, where, just the industry has completely changed by technology. Now, I think we'll continue to see that where, software's eating the world over here in Hong Kong. Like Sean said, it's continue to eat the world. I think you'll see more of that where technology is kind of making a better, more efficient process for that GP LP relationship. And the way you'd see it with Vector, right, is, using technology to help with a better GP portal or LP portal, right? If I'm an LP, I want to log into a place and really understand what's going on with my investment. What is it valued at? where am I reporting documents, things that I need to kind of run my business on the LP side. So I think you're seeing more of that, and that is an improvement. I think that's, those are trends that are moving in the right direction for LPGP transparency. It's
interesting because you touched on something that I feel like I have a lot of conversations about with new first-time fund managers, and it's, they have this really great opportunity, and obviously fundraising is a whole different conversation, but aside from fundraising, it's like, okay, I have this opportunity, I want to launch a fund, but it's setting everything up and the cost behind, like, okay, now I need to think about paying legal, I have to find my fund admin, I have to find tax, like I have to do all these moving pieces, and that's kind of that hindering component of actually getting going and launching the fund. And I think that's why I see, there's such a great opportunity for companies like Sydecar coming into play when it's, okay, this is my first fund, I have this great opportunity, I'm raising 5 million, but I cannot afford to pay for these high, these expensive fund admins and these crazy legal expenses that can be upwards of hundreds of thousands, depending on what you're doing. And that, however many years ago, like 10 years ago, it wasn't even an option. Like you just wouldn't be able to do it. So then seeing platforms come out like Sydecar and being able to actually go and do it is pretty incredible to see, and then that's the start to raising the next however much, like, start with 5, then you're at 20, 50, 100, but you got to start. So it's really been cool to see that being able to open the opportunity and open those doors.
I mean, the thing, well, there's a lot of things I've liked that have happened over the last few years, but the K1 thing for you guys, Rob, I mean, that's great, right? The fact that you can kind of issue those, it makes sense. It should be happening, right? We have all this technology, we know the transactions. Why not the K1s? So if I'm a new fund manager and I'm very cost conscious, and the time around engaging third-party tax provider can be very costly and time-consuming. So the fact that you have that, I think, and it makes sense. I think it makes sense that should happen. And good job that you've got it. So good stuff. Well,
and just for the audience, the K1, right, is a tax document, a tax form that's issued on behalf of business partnerships. So you're invested as an LP into the LP, like you're invested into a limited partnership, you're invested into a partnership, and therefore I, as the LP, need a K1 every year. So if I'm invested into a fund, let's say Vector's managing that fund, like Vector needs to send me a K1 for that fund. What are the business gains? What are the business losses, right? Like just how much is that worth right now? Ditto for the SPV, right? And Sydecar has very efficiently made this a very seamless, effective, we deliver K1s on time, which is very important because taxes isn't something you want to mess around with, right? When it comes to compliance, that's something you can't avoid every year. And if you don't get your K1 on time, right, that can be detrimental to your whole tax process. And so it sounds like a simple thing, but right, technology has enabled the efficiency of K1 reporting, at least in Sydecar's case, right? And there's an article out on the web that you can search and find where I don't think you were late on a single K1 this year, right? And you were actually early when it came to reporting K1s. And so something to read up on where, again, this stuff doesn't mean anything until you are an LP in a fund or you are a GP having to issue tons of K1s to every single one of your 100 or 2,500 LPs. And then it becomes this really complex thing for a really simple issuance of a tax document. But again, a fund administrator, if you don't want to do that yourself, insourcing, right? You hire a fund administrator that helps you to kind of make sure you're compliant and on time. So that's probably obvious to most people, but just kind of double click into that for a second.
Yeah, thanks for keeping me honest on all the acronyms, Winter. Appreciate that. We only have a few minutes left. I don't know if there's
I'm sensitive about it because I was at an event.
Thanks.
Sorry, Sean. I was just saying I was sensitive about it because last week someone was like, please add in more definitions of stuff when you talk. So.
That's great.
This is the manifestation of that last week event. Thanks, Sean.
All right. Well, Emma, do we have any questions out there for the last few minutes? If not, well, I've got a question.
No, you go ahead. Go ahead with your last question, Sean.
Okay. So for me, what I see is a lot of the time, let's just call it a mismanagement of expectation. So, we talked earlier about some of the things you guys are bringing technology to bear, and that's help with turnover and things like that, or you don't have any because you're a product. If I'm a new manager, I'm a new VC. I talk to you two, Rob, Emma, and I'm selecting you. What should I be asking you? What questions do I ask you to make sure I'm managing expectation of what you're going to deliver and what I should expect?
Rob, go ahead.
Okay. I think it's really important to first understand what the scope of what you're responsible for as a manager, and then to make sure that you're covering your bases around who that you're outsourcing that to and who's covering what. And so in the context of what we're doing as the administrator, what is that checklist of things that we're delivering? What is the scope of services that's comprised by our platform offering, so that you're not missing something? And that's something that we want to lean in on and say, okay, this is what we don't do. We have partners, we can make introductions. Here are the things that we're covering for you, so that you get that map and make sure that you're covering everything that you need to know.
Yeah. And just to spin off of that too, I love getting the question is what do you not do? Because it's easier to say the few things that we don't. I guess it's somewhat easier to say the few things that we don't than what we do, but it's helpful to set those expectations. Okay, we don't do valuations, we don't do budgeting, things like that. And then coming in, that's setting the expectation. I think also too is talking a lot about team composition. So actually across the board with different fund admins now, there's a lot of different types of team structures you can get. It used to be more standard, but now that it's kind of changed up in the recent years. And I think that comes down to, how do you like to work with your team? Are you going to set up recurring calls? What's the method of communication? Are you going to be sending things over email? Is there a portal that you're going to be using? What's the kind of response rate that you might be getting from the fund admin? And, there's some out there that'll take 3 to 5 business days. There's some that do 24 hours response at least. Is there a phone line that you can pick up the phone? Do they do Slack? Do they do chat? What is that type of communication is really big to set those expectations too. And then I think part of it is when you do go to onboard with a fund admin is going through those questions that you have is are we doing this? Are you doing this? This is the list of standard stuff that we get, but especially, with Vector, we're a little bit more of a customized solution. So I think with Sydecar, it might be very straightforward, but with us, it's a little bit more okay, we can set up the wires, but you can also set up the wires if you wanted to, and we'll just track the banking transactions, things like that. So asking those questions when you go through the onboarding process, really getting to know your team, how they work, how you like to work, and being very upfront about that, I think just will create a better relationship long-term.
Great. All right. Well, I think we're at time. So I just want to thank everybody. Emma, Rob, Winter, special thanks to you, Winter, joining us at 3 o'clock in the morning in Hong Kong. Appreciate that.
Yeah.
Whatever time it is. But, hope everybody enjoyed the panel. Thanks for attending, and we'll see you next time.
Education never sleeps.
That's right. Thanks, guys.
Thank you.
All right. Take care, everyone. Thank you.